Ladies and gentlemen, I think the stock market is probably going to make new all-time highs this week. We have the first meeting between Chinese and US trade officials since the Trump Xi phone call tomorrow. You know what is ultimately going to happen here? Yeah, we're going to get a trade deal, blah, 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 fentanyl. And I think ultimately the tariff rate's going to fall to 10%. Fine, great, whatever. But the big news that I think could come soon for markets is specifically related to NVIDIA. The US critically needs rare earth materials out of China. China critically needs semiconductors from NVIDIA to compete with the US. You're going to have a trade-off here where NVIDIA has loosened restrictions in their Chinese market, and China is going to dramatically loosen the rare earth, export controls. It's a trade-off. Now, this trade-off is going to be very positive for the stock market, and we could get some of those headlines coming out tomorrow. Now, beyond that, we do have a big week as far as economic data, and even to some extent, earnings that are still ongoing. I will break all of this down throughout this video and my expectations for this week. But first, Wall Street, you got to understand this, is still very bearish. But once we break all-time highs, it's going to start a chase. Because why? New all-time highs tend to be preceded by new all-time highs. Markets that go up tend to continue to go up. Right? Like, what was that? In 2023 or 2024, we had like 70 new all-time highs. Like, if the rally was going to fail, it's going to fail here. So once you get that big break, which is only about 2% to new all-time highs from here, that's where Wall Street is going to become decisively more bullish. And I think this sets us up for a 20% rally into year end. Ladies and gentlemen, I hope you guys enjoy this video. This week is going to be exciting, to say the very least. Hit that like button and subscribe to the channel if you have not done so already, and let's get rocking and rolling. Ladies and gentlemen, first things first, Hassett says that certain tariffs should be expected. Is the White House economic advisor, Hassett. He spoke on CBS today. It says that China is not releasing mineral exports at the pace the US wants. And the AI overview says China's tighter grip on rare earth exports is sending clear shockwaves through U.S. supply chains, with automakers and defense names feeling the pinch first. Cost spikes and looming production halts are reshaping risk models, pushing traders to price in more volatility for exposed sectors. This isn't just headline risk. Option flows and volume upticks on key industrial stocks show real money repositioning, while whispers of reshoring play out from D.C. to Wall Street. But I think inevitably we are going to see a trade deal with China that has to do with, yes, China giving us rare earths, but the US giving China semiconductors. That is where this ultimately ends, I believe. Now, we should get news of Trump, this trade meeting with China coming very soon. I think that's one of the next steps, is loosening restrictions on NVIDIA. That's obviously going to be a massive catalyst for this market. I mean, imagine that. NVIDIA is probably going to be up 10+% that day. So that is something I think we can kind of position for ahead of time if you are someone that, believes what I believe. But again, it's not financial advice. I'm not a financial advisor. That could be wrong. I do believe, though, that is inevitable. And White House Press Secretary Leavitt says that they want China and the U.S. to continue forward with a trade deal. Press Secretary Leavitt says China must comply with its side of the trade deal. Again, I don't know when the next meeting between China and the U.S. is scheduled. Okay, maybe I'm living under a rock, but the U.S. and China are set for trade talks in London tomorrow. Great. Fantastic. Okay. I hope we get this, loosening of rare earths. in exchange for semiconductors. That's going to push markets to new all-time highs. Now, China's foreign ministry said on Saturday that Vice Premier Li Lefeng will be in the United Kingdom between June 8th and June 13th, adding that the first meeting of the China-US Economic and Trade Consultation Mechanism would be held during the visit. Trump wrote, quote, "The meeting should go very well." Trump spoke to Chinese President Xi Jinping on Thursday in a rare leader-to-leader call amid weeks of brewing trade tensions and dispute over critical minerals. Trump and Xi agreed to visit one another and asked their staffs to hold talks in the meantime. China, meanwhile, has seen its own supply of key U.S. imports like chip design software and nuclear plant parts curtailed. So, again, this is going to be a trade-off that is very much going to be positive for our markets when it happens. And some of those headlines could come out tomorrow. If they do, markets are going to blast to new all-time highs. Basically just because of NVIDIA and AI. And I think that's partially why AI stocks did well on Friday, is because some people are sniffing out, I believe, the relaxation of, the restrictions on China. China would be a huge market for NVIDIA. NVIDIA in 2022, before really the whole AI Cold War started, that really started in the second half of 2023. So it's been going on for about 2 years now. NVIDIA had like 90+% market share in the semiconductor market in China. Today it's at 50%. But it's massively bigger today than it was then. Way bigger. Okay? So letting NVIDIA sell in that country, even just like better chips, maybe not the Blackwells, but H200s, let's say, yeah, would be huge for NVIDIA. Donald Trump assumes the relationship with Musk is over, but again, that's really not a bad headline. He's assuming, so that means he's open to having a relationship with Elon. Now, we do have some earnings as well for this upcoming week. Monday in after hours, you have Casey's. Tuesday, you have JM Smucker in the morning. In the after hours, you have GameStop, GitLab, Dave & Buster's, Stitch Fix, and PetMeds. Wednesday pre-market, you have Chewy's, Victoria's Secret. Wednesday and after hours, Oracle and Oxford. Thursday, you have Adobe and Restoration Hardware. So Oracle, Adobe, RH, GameStop, GitLab, Chewy's, Dave & Buster's, Victoria's Secret, Casey's. Those are some of the bigger ones. Some consumer-related names, some more AI names like Oracle and Adobe, as well as GitLab. Now, this week is also going to be a huge week for economic data. Like, there's going to be a lot of headlines coming out. There's going to be a lot of company-specific news, I'm sure, but also economic data. Tomorrow, you get wholesale inventories month over month, which feeds into the GDP report, which, by the way, Q2 GDP is currently being estimated at 3.8%. So a big recovery from the negative report that you had last month. But it's not as great as I guess you would think. It says here, the nowcast of second quarter real personal consumption expenditures growth and real gross private domestic investment growth. That's important. Real gross private domestic investment growth decreased from 4% to 0.5% respectively, to 2.6% to negative 2.2%. So real domestic private investment growth is actually negative 2.2%. Like, that's not great. What's actually boosting up the GDP numbers is the smaller deficit because of less imports, right? GDP numbers are GDP numbers, so Wall Street doesn't care too much as of now, but there's going to be some big swings in GDP because it's really just coming from the imports and exports. That's the bottom line. Consumer inflation expectations have held steady at 3.6% for the last 2 months. You're expecting them to hold steady again tomorrow morning. You have a 3-month and 6-month bond auction tomorrow as well. On Tuesday, you have the NFIB Business Optimism Index, expecting that to actually get a little bit better. And then you have a 3-year bond auction. Some of the bond auctions recently, since the downgrade from Moody's, has been kind of weird, especially the longer dated ones like the 5, 7, 10, 20, 30 year auctions. So I don't think the 3 year is going to be really a big catalyst, but still, you want to watch it. We get CPI on Wednesday. Okay. Core month over month is expected to rise from 0.2% to 0.3%. That's good because expectations are inflation's going to rise. Okay. I would rather have high expectations and then come in low versus low expectations and then come in high. And I think we're going to come in low, right? I don't think we have inflation in this country anymore. And a lot of Fed officials believe this May report is going to show inflation. That the last non-tariff report was April, and then after April, we're just going to start seeing a bunch of inflation in the inflation numbers. I don't think we're going to see that. So I think Wednesday could actually be a big positive catalyst as long as that inflation number comes in low. Now, core year over year is expected at 2.9%, up from 2.8% last month. Headline inflation month over month is not expected to really move at all. You're expecting 0.2%. Last month was 0.2%. And year over year CPI headline is expected at 2.5%. Last month was 2.3%. So, I think Wednesday could be a positive day in terms of the CPI report. You do get a 10-year bond auction at 1 p.m. as well. That is worth mentioning. And then Thursday, you're going to get PPI month over month, expecting 0.2%. Last month was negative 0.5%. So I don't think that's going to be a huge catalyst. Initial jobless claims, definitely something to watch following last week's 247,000 number. Kind of spooked some people. You're expecting 239,000 for this upcoming week. Now, that is it for Thursday. On Friday, you're going to get Michigan consumer sentiment. Wall Street cares about the inflation expectations the most. The 1 year is at 6.6%. This is higher than where you were when CPI was almost 9% in 2022. Like, these have blown up in recent months. It's all political. It's Democrat respondents swinging the numbers. 5-year inflation expectations at 4.2%. Again, that is way higher than it was even during 2022 when you had almost 9% CPI. Like, in 2022, the 5-year inflation expectation was 3%. So you could see just how crazy this is. You've actually seen it start to come down. It was at 4.4% in April. In May, it dropped to 4.2%. So we're hopeful that it will come down again. If it comes down again, then that's definitely going to be seen as positive for the markets. In terms of the broader markets, Fear and Greed Index is at 63, which is almost midpoint of greed. Market momentum is fear. Stock price strength is greed. Stock price breadth, extreme greed. Put in call options, fear. Market volatility is neutral. Safe haven demand, extreme greed. And junk bond demand, currently in greed. The let's see, percent of stocks trading above their 50-day moving average just shows a lot of market correlation recently. It's currently at 73.71%. So you're on the higher end range of where we have been at over the last couple of years. It's actually a really good sign that a lot of stocks have done well together, that it's not just the Mag 7 pushing markets higher. Most stocks have recovered quite a bit from the April lows. That's a positive thing, historically speaking. Now, the AI Investor Sentiment Survey, we've talked about this before on the channel a couple of times. One of the surveys I like to pay a lot of attention to. The more bears we have, the more bullish I am. It's a very good contrarian indicator, and you still have almost 10% more bears than bulls. Bearish investors at 41.4%, bullish investors at 32.7%, and neutral investors still very elevated as well at 25.9%. This, to me, screams new all-time highs are coming for markets. Now, I think between, trade deal with China, loosening restrictions on NVIDIA, getting rare earths for the U.S., between that and not ultimately having an inflation problem like the Fed thinks we will, having the economy that holds up, does not go into a recession, greater clarity on earnings, this AI Cold War really fueling AI innovation, I think we're going to get a 20% rally into year end. That will not change unless something dramatic happens. I think what's actually fascinating about this is Wall Street is still pretty bearish right now. But do you know when they will not be bearish as much anymore? When everyone's going to all of a sudden turn bullish? When we hit new all-time highs. Yep. When we hit new all-time highs, that's when Wall Street is going to say, well, we got to be bullish now. Because why? Because new all-time highs tend to precede new all-time highs. If the rally is going to fail, it is going to fail right now. Right? As you're almost at new all-time highs. This is when the rally would fail. And I think actually right now, we could be at the precipice of a larger rally. But hey, I'm not a financial advisor. I'm not a financial planner. Let me know what you guys think about all of this information down below in the comment section. Have a great rest of your day, and I will see you in the next one.